if I sold the bottom on Pepe on half my spot bag this morning, I'd be a little mad, but I replaced it with Maker. It's okay. Maker Maxis.
We're live.
I think we're live.
Are we live?
I think we're live, yeah.
I said we were live.
Good morning, everybody. Welcome to.
I was like, this is a really interesting intro for Tommy. Wow.
I didn't realize we had started. My bad. Good morning, everybody. Welcome to today's episode of Market Check, brought to you by Because Bitcoin. I'm Snorlax. You also know me as Tommy. I'm joined by Tucker, Will's Outlook, and Max. I'm just laughing at everybody's backgrounds today. We're having some fun. Right, yesterday we had a pretty enjoyable holiday. I hope everybody had a great time with their families. I know I did. I grilled out with my mom, my fiance. We made some really good cheeseburgers, so can't complain, right? Getting into the markets, guys. So far, crypto, the main market I trade, has been very, very red this morning. Equities are the exact polar opposite, and I can't count on one or two hands how many times we can say exactly that on a day this year. Where crypto is very red and equities are maintaining that consistent uptrend. Even though I guess I'm looking at indices right now, and we went from red to green, and we're mostly flat on the day. But I'm looking at things like Google that are really outperforming. You're seeing some very select small and mid caps still outperforming as well. So even if this is a dip before the rip or it's a top, you're still seeing people want to bid risk, right? There's a very strong appetite for risk, which I figured would be into crypto, and it has bled into crypto probably into the end of June. But it remains to be seen, how if crypto can continue to show this strength. Here at a very key resistance level, right? This is the previous, we're battling with it right now, the previous yearly high. We got up to it on Bitcoin, that is, yesterday or the day before, and we rejected, that might have been Friday, actually. But, I thought it was a little savage, guys, that they ran it all the way up to the yearly high, and they didn't quite sweep it. And then they dumped price all the way back down towards 30K, 30.2. I guess the question now for me is Bitcoin going to dump further towards 28K, 29K, or are we still, potentially just in a range with Bitcoin, right? We're at range lows right now. It could be much ado about nothing, right? Like the first sell-off of the week into support, nothing to worry about. We're going to get into all of that and more on this show. I want to get into equities as well, right? We talked about indices a little bit. IWM I see is a little bit red today. Can't quite get that breakout that it's been, yearning for on the higher time frame. I can't tell if it's, trying to shake people out before eventually a massive rip. And maybe that is kind of going to eventually signal the end of end of the rally in IWM, or end of the rally for equities, just given the what that would represent for risk. But I want to get right into it, guys. I feel like Bitcoin is probably, until it breaks 30K, you have to assume it's just in a range here and still be bullish on altcoins at support and range lows. If you lose 30K, things look a little bit dicier, obviously, and I would be looking at least mid 28s if we got that pullback. Truthfully, I think if we broke 30K, we're probably going to be ranging, I would say, lower than probably within the 28s for about like 2 or 3 weeks if we got down there. So that could be something to watch out for. But enough. I'm kind of rambling a little bit. I want to pass it over to Max. Max, how was your 4th of July? How are you interpreting this crypto dump here at support? And then, what do you think of the contrast that we're seeing with some equity assets right now, such as Google?
Yeah. Hey, Tommy. Hey, everybody. My 4th was great. Definitely a little bit different this year as I now have a newborn. So a little bit slower, a little bit more family time, but hey, I had a really great time. The only downside was like half the day where I lived was just rainy and stormy, so we were stuck inside, just kind of hanging out. I actually rewatched a few like old episodes of Billions. It's like one of my favorite shows. So didn't expect to do that on the 4th, but I definitely had a good time. In regards to the market, look, I can't be that bearish here, truthfully. The most left curve analysis I have is that there's a there's a really solid fractal that I have. That actually I think I can share with you guys right now because I'm not hosting the call today. So yeah, let me actually just share that. So we're gonna go through like the left curve analysis and then the right curve analysis. So let me throw this up. And let me share my screen. I like being able to share my screen. All right, can you guys see this okay?
Yeah, it looks
Yeah.
great. Yeah, sorry about that time. I didn't even open the screen and let everybody see that. My bad.
So this is it's basically comparing the where we're at right now to the move that we had back in like middle March to, middle of April. And it's extremely similar. I mean, it's we'll look at it on the 4 hour. So we start again. This is the left curve analysis. I promise it'll only get better from here. But we had these three stabs at breakouts here, rejection, and sort of like, fake breakdown, and then just like general chop. Now, if we move over here, I mean, I haven't really massaged this fractal at all. Like I just kind of like Command C, Command V dropped it. Again, three stabs, little attempted breakout here, fake breakdown, and now we're just kind of chopping and ranging. And like, I mean, it's almost where the fractal is fitting too perfectly, and I'm a little skeptical just because it seems too perfect, like they're trying to make it too obvious or something. But my God, I mean, it is literally a perfect fit so far. So for one, the left curve analysis to me suggests, well, potentially maybe we're going to hold here. Beyond that, I just don't think it looks too bad. I mean, market structure is still relatively intact. Um, I mean, look, we're like, here's a low. We're kind of going mid curve now. Low, 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 low. We didn't have like a serious break of market structure and then a retest up here and then come down. Then I can understand being a little bit more bearish here. But right now, it's like this is fine. This is just a little pullback after a U.S. holiday. This is literally nothing. Looking at the total crypto market cap, and I outlined this morning. I outlined this morning in our Discord call for our premium Giga Chad members. Um, Basically total crypto market cap. Just again, for those that they don't look at it much, this is just everything. It's Bitcoin, ETH, and every single altcoin. And just think of it as like the S&P 500 of crypto. It's an all-encompassing index for everything, and it's been trading a lot cleaner than Bitcoin and Ethereum alone. For example, if you were to take a look at Bitcoin right now above its range high, let's go over to Bitcoin real quick. You would see, this is Bitcoin's range here, and we can talk about Bitcoin, but this same range, Bitcoin is well above. But also something to consider is Bitcoin or the FTX collapse went way below. So it's like we're getting a little bit of corrections here and there, but I think total takes out a lot of the noise. Very, very clean and defined range high, very clean and defined range low. And right now we basically just rejected right off of range high. Very obvious place for a rejection, not surprising at all. Something to consider here is we do have some really juicy equal highs right up here. So maybe we could get something like this. But at the very same time, we have a really solid weekly FEG sitting significantly below where we are right now. So it wouldn't surprise me at all if we came back to fill this in. This is a potential 5% drawdown on the total crypto market cap. So I imagine in that scenario, maybe Bitcoin would dip 3%, alts would dip between 4 and 7%, and we'd fill that weekly FEG. So the question that we have to ask ourselves is, I think that these are going to get tagged. These equal highs are going to get tagged here. And it's also nice that it's being protected right here by a daily order block or daily supply. So I would imagine that we're going to see a little bit of a stuffing there. So the question is, do we see a move like this? And then we come down and fill this FEG and then move up like that? Or do we move down first and then move up and then we'll decide from there? I don't know whether up or down first. I mean, the truth of the matter is nobody does. But I don't really see that much of a reason to be, mid to high time frame bearish here. We just had a little bit of a pullback. It's nothing more than that at this point. So if we start breaking down, then we go back to the drawing board and then maybe we can be bearish. But at this point, I'm seeing a little bit of a pullback across the board. It's Wednesday. So, we'll see if we can hold market structure and continue to be, at least mid time frame bullish. In regards to equities, again, in the short term, I don't see much of a reason to be bearish. Ignoring just like little morning or, futures pre-market dumps, market structure still looks good. And, look, even if we are, very overextended or getting to that point of certain individual names are very oversold, momentum is a hell of a phenomenon. You don't have to be early to something because that leaves you very subjected to being, squeezed. I would rather be late and, short or de-risk on some sort of retest after a breakdown rather than try to top tick it. This is not the environment to try to top tick anything, crypto or equities. So for right now, you're probably best off throwing on some like, a 5, 8, 12, 20, 50, just a bunch of different moving averages, and just seeing if those are being respected. The trend continues. You don't have to top tick something if you're bearish. You don't have to bottom tick something if you're bullish. It's okay to wait for a little bit of confirmation, at least to size in. So nothing for me in the short term has changed. I'm still leaning bullish. It's July 5th. The NASDAQ has had 12 consecutive green Julys. So does it have a 13th? I have no idea. But 12 is a hell of a streak. And I think that crypto on the high time frame doesn't look bad here. So ignoring the noise, trying to stay off the low time frames because we are seeing all these little OI flushes, whether up or down. They're speaking measures to how illiquid the books are right now. It doesn't take that much to squeeze ETH 30, 40, 50 points. Not at all. And of course, ETH does that anyways. It's Ethereum. It's very difficult to trade. So for me, I'm just trying to remove as much of the static and the noise as possible. So anyways, still leaning bullish in the short term. Longer term, very bearish. But, hey, look, I'm positioned for more upside in crypto, even if it means we pull back a little bit. I think it would be like total crypto market cap pulls back maybe 4 to 5% total. But beyond that, I think that there should be demand down there. I think the market still wants to go risk on. So till I see something that materially changes my bias, like a break of market structure, or a materially different types of flows, I'm leaning bullish here still. So, anyways, let's hear from Doctor Outlook, man. What do you got on your head there? I see loading. Dot 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 dot. Load is that loading the pump?
Yeah, it's loading the news on Twitter. Everybody's talking about the whole Zelensky thing and the war and how all this is going to bring down the markets. And it's just like that's not realistically how markets work. I think if we were to see markets dump into some catastrophic event that was going to occur in Ukraine, that would have already happened before the news, and we would just be kind of following into it, not necessarily sitting here floating at range highs, looking for a nuke after the news is out to the general public. I always find it interesting when people talk about news because it's like they tend to talk about news, but they don't understand that news, even on the internet, takes time to travel around the world, right? And somebody knows before you know, and that person that probably knows probably has stocks, and they've probably dumped all of it before you got a chance to. And there's just so little knowledge, I would say, in the general retail space that they don't understand that. This is why Nancy Pelosi is the trader of all time, right? Because she knows all the news before we do. Just like the Pentagon knows all the news before we do. If
Hey,
anybody
don't discredit Nancy. She's got more skill in one brain cell than all of us combined. Okay, she's she's the greatest investor to ever live. Will, don't take that away from her.
I mean, hey, if a cup of whiskey a day is all it takes to be intelligent, I'm all for it. All right. I would say, in a lot of ways, people have to understand how this works, man. They gotta understand how this works. It's a game. It is a game. If you're trading, you're playing the game. If you're holding, you're part of the game. You may not be playing, but you're part of it, right? Which means you're going to be consistently dealing with volatility regardless of how you feel or what you know. Again, just not really worried about it. I would tell you this, like even the COVID dump, right? The COVID dump. It started to occur well before anybody even knew COVID was a thing. The topping pattern started to occur before the general public even knew about COVID. And that's what a lot of people don't understand is that when something happens somewhere else, they already know, they already hold things here in the US and they start dumping them. And then everybody in the world finds out later, right? Including us. We're one of the everybody in the world. So if you think that people in Ukraine probably don't hold positions in US stocks or companies, and they're looking at it and they're like, oh man, this is going to dump the stock market. They are 100% thinking about that, considering that when they're looking at markets. So that they would start to dump at that point before we ever even knew what was going on. And that's the problem with being, I would say, vested, within the world, right? There's a lot of countries that are invested in us, and we're invested in a lot of countries. So anytime that things get affected here, our stocks get affected, or our market gets affected. Anytime that things get affected elsewhere, depending on how much of a position they have, our markets get affected too. It's just how these things work. Again, small dip here on Bitcoin. I talked to you about this morning, Max. I talked to the Giga Chaz and stuff like that this morning in Discord. Like, this is what I'm seeing. Like, it's a very identifiable pattern. Already previously happened. Range sideways, pump, right? And we could very easily do that again here. And this range sideways, low range, high range, chop, 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 break.
Will, are you sharing
that's all I
right
would
now?
see. Oh, my bad. Sorry. I thought it was.
I knew you were going through it in your head.
Yeah. Only in my head. But yeah, so like the thing that I was putting out here, let's back this up a bit, is that the pattern here was pretty identifiable. Previous pattern right here, it's basically just chop, 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 and then we could see the same thing over here before we end up seeing the break. But the one thing that people got to understand is, like, if it's predatory, it happens, then it happens, right? Predatory moves fast. And I'll show you guys kind of like what I mean by that. Anytime you're getting predatory pumps, boom, 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 drop, drop, right? But your accumulation took much longer, right? Your push, 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 push. That's showing you that there's a lot of momentum against you, and the reversal is coming, right? And then price does what? Predatory move. Then you get a reactionary pump based off of previous liquidity, probably a bunch of buy orders set below here because people thought this was the bottom, guessing, right? Pumped in the market, pushed back below, right? And now you form lower lows. And now you need to look at it like, hey, I'm in a downtrend now. I am not in an uptrend. I need to pay attention here. And then from there, what do you get? Again, pump, 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 pump. Look how many weeks had to go by before they could get to here. You've got hard momentum against you, and then predatory dump, right? And then now you have to look at your lows from a realistic standpoint. Like, all right, where are my lows? Where is my volume? Rising, right? Where is my RSI? Following my volume, right? And if you're looking at all this from a realistic standpoint, you could tell a reversal is in the cards at this point, right? Because you've got strength rising against drop, and you've got volume rising against drop. So you've got interest that keeps getting more and more interested the lower and lower price goes in this area specifically. So you're looking for the reversal in here. Even though you could see the predatory moves happening, the predatory moves are happening because they're intending to make you think that the predatory moves are going to continue to happen, right? Whenever it's a non-predatory move, it's just going to be a flush. Boom. It's a flush, right? That's not a predatory move. That's a panic, right? This is a panic move. This is a shake. This is a shake. This is a shake. They're continuing to shake the lows to reverse the market. because we can't have everybody buying the bottom, right? Because then the market maker can't buy the bottom. So how do you get people out of their positions? You continue to scare them, scare them, scare them, and tell them, hey, we're going to go lower, guys. We're just going to keep going lower, keep going lower. And I can tell you, it was like Ukraine, and then yada yada, and then this and that, some other random news, and then people will say, "Oh, it's news, it's this, it's this, that, it's this." No, the money is moving. You got to pay attention to the money, right? Ignore the news. I'm telling you guys, like you can look. If you see a new kid Japan, okay, we can all agree markets are going to tank. They're going to get wrecked, right? But unless something catastrophic happens like that, like no, I don't see it affecting markets in a way that a lot of people are sitting here talking about it. And all I've seen is doom posting. Like my phone this morning is ding 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 ding, and I'm just like looking. I'm like, what the heck is going on? And everybody across the board is talking about Zelensky and Ukraine. Everybody, right? Just doom posting how market's going to take, yada yada. And where are we at? Oh my gosh, we tanked so hard. So much tanking here, just tons of it, right? Even broke the lows. I mean, didn't, but let's just go with it. I hate being facetious about these kind of things, but it's like there's such little knowledge in the market and understanding how money moves. Like it actually blows my mind because like this is all Reddit. It's information that's available to everybody. I've given like everybody in the world. I come on here every day. I've talked about it in the past with previous people who followed me for a long time. Like I can give you a 3-step process. It's really easy to follow. Look for lower lows. Is strength going in the opposite direction? Right? That's the most easiest way to look at markets. You don't need to know charts, but you can't be on the 1 hour. You can't be on the 4 hour because you're on the 1 hour, 4 hour, you're only playing in here. Right? If you're on a weekly, monthly time frame, you can actually find real market reversals with just that method alone. Just is strength moving against drop, right? Now, does it mean you catch exact bottoms? No. There are times where you're like, okay, strength moving against drop, boom, it drops down, you buy here, it drops again. But you got to realize the drop that's occurring is slowing, right? This is a slow drop. Even if it were to continue. Where was the fast drop? The fast drop was in the flush. This is what you don't want to get caught in. You do not want to get caught in a flush, right? Once the flush occurs and you start bouncing lows, you can buy those lows because those lows are going to reverse. And where are those lows going to reverse to? They're typically going to reverse to the top of the flush. That's atypical in most stocks. And most stocks have done that. They've recovered back to flush highs. Even Tesla, right? Tesla's a great example of that because Tesla had an insane flush compared to other stocks.
Rebalancing, man.
It's a rebalance.
Yes.
Exactly. And you can see it right here. This was the flush. This is the short I took. By the way, guys, everybody's telling me out here it's going to break out. I was like, no. I was like, you're done. I'm like, this thing's freaking toast. Because it was the most obvious short in the world. And all your Tesla bulls are like, you're an idiot. You're an idiot. You're an idiot. I'm like, okay, we'll see. And then boom, couldn't even reach range highs, right? Like if I were to adjust this appropriately, couldn't even reach range highs. Not only could you not reach range highs here, you basically in formation double topped, right? That's what I was looking for. I was looking for the in formation because when they came up, swung low, and came up again, I was like, if they reject here, they're gonna get smoked. And that's exactly what happened. And, I was looking for levels around previous supports, right? That's all I was doing. I was like, okay, here's one, and here's one. And I just kept, and I drew them all the way down because there's always potential for these things to flush down really deep, right? But you have to look where rebounds happen. And once we started to rebound here, I initially had $100. I think it was 125 is what I had, something like that. As my low range here to where I should start looking to DCA. So I think that right there was my range I was looking for. And that was based off of this. Obviously I could have gone to the lows maybe closer to here. But I went with this right here because I didn't want to miss the bottom. The problem with always looking for the low range is that a lot of the time you can get scalped out of that range. right? You know, traders come in and they will keep you from getting to that price position that you're targeting. So I never go for the lowest range. I look for like the mid range and the lower range, right? So the mid range for me was right in here, and that's because your high is here and your real low is here. So I was playing more of in the mid range here, and there's a strong support here, right? So I was like, okay, I was like, they may come into this area, and this is where I want to look to buy, and this is where I came in to buy. Now, did I catch the exact bottom? No, I didn't. I don't think many people ever will, right? If you catch a bottom, it'll probably be once or twice in your life, and that's if you're a really good trader and you trade on a continuing basis. And I mean exact bottom as in like you're probably within pennies of the low. Yeah, outside of that, man, like the reversal occurred. We then stayed above, right? We came up, we came down, and remember, I just marked out the highs and the lows here, and we almost from this high to low, and this is my anticipation, came back and filled that before we actually moved to get it, right? Came all the way back and filled the high end range to show that there was true support here. So they tapped this liquidity here, basically, right? Didn't quite touch it all the way, but they basically tapped this whole liquidity zone twice. They tapped it once here, and they tapped it a second time here to show strength, and then shifted away, right? That's how they got the momentum to push up to get up to where they're at. Now you're testing highs, and you've gapped up right here too, right? So you've got really good momentum to push up, but your resistance on Tesla now is right around here, right? This is your target high. And then if you can get above this, your next target high is here, your next target high is here, and then you're back at all-time highs. So you got 3-4 resistances to the high, but once you flip this, you're in an uptrend. Full-on uptrend. I mean, you could arguably say once you flip that, you're in an uptrend, right? But I look at it like this. Once you get above here, this is your flush, right? And once you get above flush, sorry about that. Once you get above flush, your trend is completely flipped. It's going the other direction. There's no possibility of really coming back down and trying to re-push back into those lower positions beyond the flush, right? Your flush is done. So if you think at that point that Tesla's going to come back and where your Tesla's lows, that's a difficult conversation to have, even though I think SPY will go lower, right? Do I know what sectors will get affected by that? Not specifically, but you know, when it comes to Tesla, I could say if they get above here, they could retest all-time highs, and let's say they get bearish, right? Maybe they come down and they hold this low, something like that. But you more than likely won't re-see these positions here, in my perspective, right? This is just what I'm saying. And Tesla seems to be time and time again kind of proving that. Anytime it has these big pullbacks, you can see here, basically you get the big pullback here, come back up, you get the higher low here, and then you go. The problem is here is like you've got a long consolidated sideways top range, right? Arguably, this low here is kind of like this whole occurrence right here on Tesla. And now we're going to be going up and coming back down and retesting lows, but it's going to be a higher low here.
Will, have you not heard, bro? Tesla's going to zero.
I've heard that.
Have you heard of Lucid or Rivian?
I've heard of both of those, but I do want to entertain your conversation of Tesla going to zero. I've also heard the dollar's going to zero, right? I hear that every day. And I always tell people when they're like, one Bitcoin is one Bitcoin, I'm like, so when you go to the Lambo shop, you want to go buy a Lambo, I'm like, do you tell them one Bitcoin is one Bitcoin, and how many Bitcoins do you get at the Lambo shop when you want to buy a Lambo? And they're like, well, I just denominate and I go back into fiat.
What's that copy pasta? The fastest way to dox yourself as a forex plebe is to ask on any given day why the dollar is red. its path to zero is preordained. It needs no reason.
I mean, granted, look, I won't disagree with the fact that fiat can't change and we can't change to a different type of or format of trading, but I don't think it's one Bitcoin is one Bitcoin. I do think Bitcoin is a great store of value. I know that may be sinful. Max, don't attack me, man.
I was gonna say we don't want that. I hate the Bitcoin maxi argument of like we don't want any sort of federal currency to exist. Because I think what you're describing is like the libertarian anarchist pipe dream of like there's no federal government, there's no law and order, and they have this dream of like you can just we just have our own currency and you can own guns and protect yourself, and it's like yeah, that might work for like a few people. Most people would hate that reality, and again, no offense, but maybe so. Take it if you want. I've seen a lot of the Bitcoin maxis out there. Unless you're like Robert Breedlove, who's just an absolute tank, you're probably going to get killed and someone's going to steal your seed phrase. Okay, they're going to tie you up and waterboard you, and good luck defending yourself. So you want some degree of law and order. I do agree. Like we want to have our rights. We want to have like the choice to own the property that we want without any unnecessary government overreach. But if one Bitcoin becomes one Bitcoin, think about what that implies. Think about what had to happen in order for that to get there. Okay. For there to not be a US dollar or a euro or any other like national currency and everything is in Bitcoin. I mean, really think about what that would imply. I don't think that's a world you truly are ready to live in, honestly. I don't think so. So, no, I don't want that at all. I don't want to spend Bitcoin. When it comes time to hold Bitcoin, and I mean, arguably, it's always time to hold some Bitcoin. But in my opinion, when it's time to really pack your bags, throw it in a ledger, and just leave it for a few years, that's all I want to do. I want to hold it, just like I would never make the argument that like, oh well, we don't need dollars. I have like apartment buildings that I own. No, it's not the case. I know it's different, but it's like dollars work perfectly for spending. Nobody's advocating that you just take all of your money and hold it in dollars in the bank forever. That's a horrible investment strategy, and you're guaranteed to underperform forever. And that's how it's always been. Okay, so our current system forces you to constantly reinvest your earnings, to reinvest your dollars. If you are not constantly investing, you are losing. You should be afraid to have dollars in the bank. Okay, unless it's I think right now you could make the case that maybe it makes sense. You could generate, a small yield and wait to pick up assets at cheaper prices potentially. But, over a long period of time, there is zero incentive to hold dollars. Zero, even if it's going to pay you 2 to 5% yield, unless for a very small amount of time that works for you, you should be afraid to hold dollars. So no, you don't want to spend your Bitcoin. I don't want to spend Bitcoin. I want to just hold it, and I want them to continue to perpetuate this fiat Ponzi, and I can spend my dollars and I can convert my dollars to Bitcoin or other premier assets that I think will appreciate against the dollar. Nothing's wrong with it. Okay. I don't want to live in a world where there's no federal currency that I can just spend because I don't care to hold it. That's not a world you want to live in. I promise you. Okay, there's going to be food riots and people getting like attacked, and it's you don't want to live in like a Mad Max apocalyptic type of world. Okay, you don't want that. And by the way, that type of world, you might not even have internet. Okay, so good luck with that. I'm just saying, be careful what you wish for.
Yeah, well, I think a lot of people don't realize too, like spending currency and asset holding are two different things, right? Spending currency is something that's consistently traded amongst one person to another. It was given to you for services rendered, whether that be through a job, whether that be through, you helping somebody out and they're paying you to do that, whatever, like, or maybe you help some lady at the store and she gave you $5, right? That's what people do as a generosity / payment system. Whereas like when you look at things like assets, the reason assets have value is because they aren't being used for trade. They're being used to store, right? And I think like Bitcoin, when you look at it, if you're going to call it a store of value, you cannot say it's a store of value and I can go buy a Lamborghini with it, right? Because if you can go buy a Lamborghini with it, it is a trading currency. It is as bad, if not the same as fiat itself, right? It is a losing battle because it's consistently being traded. Assets that are being held, and even gold, arguably, right? Because what happens with gold? People go and they buy gold chains, they buy earrings, they buy different things with gold, right? Rolexes with gold, all kinds of stuff. And those things hold their value because guess what? You're not going to the Lambo store and saying, hey, I have this big chain with $30,000 worth of diamonds and, $200,000 worth of gold. I'm going to give you this for that Lambo. No, you would never trade that, right? You would trade them dollars. You would trade them fiat because the fiat has no value. And I think a lot of people miss that point so much when they look at investing assets that they don't understand, like, spending Bitcoin doesn't make sense. It just doesn't. Like,
No, why would you want to spend an asset that's primed to appreciate over the long term? You spend the one that's primed and set up to depreciate over the long term. That doesn't have any intrinsic value. I don't want to spend my Bitcoin. They've got it all backwards. Like it's not. I don't think Bitcoin works in the way that you think it will. If there's no like fiat debasement to counter it, then it kind of just becomes like. I mean, yes, a better version of spendable currency with a fixed supply, but also at the same time, the reason that assets like Tesla that you have pulled up here appreciate rapidly, one, innovation, two, I guess, technological adoption and being a pioneer, for a different niche. But again, a lot of the reason that these risk assets appreciate is because they're denominated in a currency that is being debased and inflated away. So without that, everything, the whole axis of investing gets thrown off. So I just, again, I don't think there's an issue with things the way they are. It's yes, we want our federal currency to be honored. We want to feel as though we can trust those that are empowered to make responsible decisions that don't have a negative impact on those that maybe don't have the luxury of investing. Maybe they live paycheck to paycheck. We don't want them to necessarily suffer. But for the large majority of people that passively invest through retirement accounts, I mean, look, you can't. I mean, look what happens then, right? If there's no dollars, it's like pull up like a Amazon Bitcoin chart. I mean, it's like, can everybody only invest in Bitcoin forever then? Like the Michael Saylor paradigm, like you should only ever invest in Bitcoin because that's what's going to happen is like, and then
if Bitcoin becomes fiat, then Bitcoin becomes, worthless. It literally does.
No, Will, I think I mean, can we entertain that Bitcoin could be versatile and multifaceted and can be used to buy things while also being a store of value? Because being a store of value doesn't solely mean that you just can't buy anything with it. Like that's not.
Well, here let me ask you this, Tucker. If you go to buy a 50-cent candy bar at the gas station, how much will that cost you in transaction fees?
Like in dollars?
In dollars.
Nothing. Like 50 cents?
No, it costs the credit card company a couple percent, but it doesn't cost you anything.
Well, am I paying in cash or what's going on?
Well, here's the thing. You're sending that from one wallet to another. How much is a fee to send Bitcoin from one wallet to another?
No, yeah, Bitcoin is very expensive and does not make sense for microtransactions, obviously.
That's exactly the point. What makes sense for microtransactions? Something that consistently devalues itself.
I mean, I buy
something
all my
ever
stuff in
inflationary.
Bitcoin, so
No, and arguably there are other cryptocurrencies that you could probably denominate / use as a spending currency. But I'm just saying Bitcoin itself doesn't logically make sense to fees.
No, I know, but like I'm thinking like at the top of the next bull run, if you're really convinced it's the top and you're gonna sell Bitcoin for dollars to take profit regardless, why wouldn't you just go buy a Lambo with it? You know what I'm saying? Like
the Lambo would devalue hugely, but
Not necessarily.
You could spend it rather than sell it, is what I'm saying.
No, but Max, I'm talking about if he's correct and we're at the top of the bull market and you buy a Lambo at the top of the bull market, it's almost like buying a house at the top of the bull market, right? Because you're going to pull back and you're going to get devaluation across the board.
No, but I'm saying
what are the odds that the Lambo outperforms Bitcoin if you literally bought it at the top?
High. high.
That's what I'm thinking too.
High.
Like if you
Yeah.
swapped a Bitcoin for a Lambo, I guess
I can
it's
see it from a
somehow-
performance standpoint.
Well,
I can
because
see,
you
yeah,
know
'cause I think
Bitcoin's
Bitcoin
gonna
may
go
go
down 80%. Is the Lambo
But
gonna go
then
down
you're
80?
viewing your entire like monetary framework is basically just like a synthetic pair against Bitcoin.
Yes.
Yeah, basically.
Yeah.
Like, oh yeah, the Bitcoin Lambo chart looks great. I'm gonna make a swap here.
Look at swap for a Lambo.
Exactly.
Look, I would say this, like the Lambo. Yeah, I see what you're saying, but I would say there's better valuations to put your money in at the top of the markets if you're trying to stay in assets.
No, I know.
Like
But my point is just that I could take profit. Like if Bitcoin goes to 120K and my thought is, okay, I want to sell here because I think we're at the top, whatever. Like I could either sell for dollars or I could buy something with it rather than sell to dollars and then buy
100%.
it. You know what I'm saying? Like I could cut the middle transaction out and just buy with Bitcoin if I wanted to.
Yeah, and if you could get another asset with that asset that you had that you know will devalue massively, I think there is a clause, and you can correct me if you know this, Max, but I'm pretty sure if you do asset to asset, there's no tax liability there. But I mean, I could be wrong. There's a tax liability to that.
Yeah.
Is it as much as like capital gains, or is it just like a minor tax?
Yeah, exactly.
You can't use Bitcoin for like a 1031 exchange or whatever it is.
Yeah, that's what I was
You're
talking about.
speaking my
Yeah.
language, Tucker.
Yeah,
That's
you can't. I've done the research because I really wanted to try to do that at one
That's
point.
what I was gonna say.
Because I was like, it's property. What are we talking
Yeah.
about here? Like,
That's what I was thinking of, because I was like, oh, they're considered commodities,
no,
right?
you can't. You can't. Will. I
Oh,
mean,
man, that's crazy. Like, how are you gonna call something a commodity and tell me I can't trade it
Yeah.
for another asset, right?
They don't know how to classify it, man.
Yeah, I think they just come up with words.
They're gonna come up with a new classification for it that lets them regulate the crap out of it.
Yeah, a whole new classification. I could agree with that. So that way, every time somebody says, "Well, that doesn't fit the Howey test," I'm like, "Well, this is a new classification." So we're gonna go ahead and add that in there because we're missing it.
Just
Interesting,
a
though.
reminder, guys, to like and subscribe if you're enjoying the content. We have conversations casual like this, and while we chart basically every day. So, yeah, sorry, my cat's biting me as I'm speaking to you. But if you are enjoying the content, we do appreciate it, and the algo loves it too when you like, and especially if you subscribe. I mean, that would be awesome if you're subscribing.
Yeah, but
There you go, Tommy.
What? Nakamoto? No. You and this dank coin, man.
He won't let it go.
My metaverse project is out for yours. Well, how does it?
I don't know about that, man. I don't know. Yours just launched. All right, mine's just been chatting while being launched for a long period of time, and the volume is nice here. That's some really good volume.
Mine's still half your market cap.
ooh,
I mean, that doesn't mean much. We're still gonna be all right. Look, I heard the same thing from Tucker on Mara, but we just did a valuation today, all right? And we're at the same X's on Mara as we are on HUD 8.
From
All right.
the bottom, yeah, that's true. That's true.
And HUD 8 is significantly less market cap. This one looks good though. Mara looks good. Probably pull up to like 18. Maybe a little, maybe like a little pullback into a run, or it's just gonna break.
Pull
Right,
up HUD
yeah.
8 there, Will. Pull it up. Come on.
Pull up.
You know.
I don't even have HUD 8 down here. So,
Just type in HUD.
all right. See, HUD 8's already topped. It's already over.
Oh no, it's about to plow through that
Look.
resistance.
It's already done. This is why you need to pick up Mara, because Mara still has room.
Unwilling to rotate.
Mara still arguably has room. Look, you're at range low support and the range high resistance. Whereas, like, if you guys come over here and you pick up the real Chad over here called Mara,
Dude, your watch list just triggers like OCD or something inside.
look right here. Look at Mara. You still got plenty of room to run, and you got all this upside.
Yeah, no, I know. It hasn't hit that August 22 high yet.
Yep. Still waiting for the run out there. Let's check out some other things I've been watching. See if they haven't moved yet.
ICP.
Yeah, this
Bro, why are you looking at ICP?
bro, it's gonna be the leader of the next market move.
No, there's no chance.
Look,
No chance, Will. I'm sorry. I have to be real with you on this one. There is no chance ICP is going to be the leader of the next bull run.
it's gonna be the leader, bro. I'm telling you. Double bottom there. Cardano.
That's so funny to me that ICP debuted on Coinbase at $1,000 a token or something crazy like that, and then it's trading for like single digits now.
Yeah.
That's why you gotta get it out.
Man, no.
It's gotta fill the wick, bro. It's gotta fill the wick. Look, it's gotta fill the wick.
It's never going to fill that way.
Look, I already got it drawn out. It's gonna fill the wick.
I'm pretty sure ICP had a project launch in 2018, and then they disappeared until they could launch their newest grift literally right at the Pico top of the May bull run.
Their newest grift. Who
Look,
is the
I heard-
company? Is it like Definity or something?
Yeah, Definity.
Yeah.
I heard the same thing about Solana, and then everybody told me how Solana is a god in 2021.
Dude, Solana's still down horrendously.
No, I'm talking about in 2021, right? Like everybody's like, this is gonna be it's gonna be the next best thing.
But Sol hadn't dumped like 99% before that happened.
All tokens get within that wreckage within the first cycle. Ooh.
I don't know. I think best case it's a Cardano, but I don't think it's ever filling that wick, man.
Where do you guys think I should pick up OX? Somewhere like in here.
No, right there, Will. Right there. I texted you
Maybe
the
right
chart
down here.
picture.
Wait, is that negative?
Almost. I see you've been charting, Will. I see you've been charting it.
Look, I just
He's scouting
Over
out. He's
here,
scouting
over
for potential buys.
Will, pull a fib and buy the golden pocket. I'll tell you right now, it's right where we are. To the bottom. Yeah.
No, we got a ways to go, man.
No. You gotta flip that. You gotta
Look,
reverse it.
look at how good I got that.
You
Look at
gotta
that.
reverse it, bro. Reverse it.
I'm right in line.
Reverse the fib.
Oh, Tucker's like, man, I wish I wasn't hosting.
Dude, look at that. Bang. Oh, shoot. Are you on log?
Hey, I'm just saying, bro.
Are you on log right now?
shit.
You're on log. I know you're on log.
Oh, that's where it's at, man. Look,
No. You need to turn off log.
that's where you get in.
No.
Will, you need to buy some flex, convert it to Ox, stake it for 3 months. You get an extra
Ox is a token.
25%.
There's like tokens where you just need to, and this is what I was telling people with DMP, and I'm not going to talk about the bag at all. It's more so like when you're talking about tokens that are,
I think we should talk about the
undervalued.
bag there. So,
When we're talking about like tokens that are way undervalued, and they're way undervalued, like DMT. I mean, I had a friend who was trying to buy it, 50% lower. It's already trading at like 9 million market cap, right? Like how much lower of a valuation do you really need to get an entry on an asset that you already feel is very, very undervalued, which is how I feel about Ox. I don't know. I'm sure it'll get pullbacks. I'm sure it will respect technicals at times, but that is the wrong DMT
Yeah,
chart.
that's the wrong one.
It's not on TradingView. You'd have to go to Dextree.
No, it is. Hit DMT.
all right,
Let's go DMT.
Oh, Mexi probably has a spot market, don't
Yeah,
they?
Mexi does.
You guys don't like my chart?
No, Polar X is not the right one. Trust me.
All right,
But yeah, I mean, if you notice something's like severely undervalued relative to the rest of the market or where it will probably be, you just like you don't. I'm not going to focus on technicals too heavily on something like Ox, right? Like it could pull back. I'm not expecting it to like take a 50% haircut from here, though. That would be surprising.
Yeah.
If it did, whatever. But
Well,
like,
type in USD.
I think is going to happen.
US what?
USD.
USD.
Type in DMT USD. And then it's the Mexi one. There you go. Sorry, I was just needed him to fix that. Yeah,
That's fun.
look at that. Look at those technicals.
So I buy somewhere in here.
You had your chance to do that, man. It's
A little
gone.
bit here.
A little bit here.
You had your chance. Is that zero?
I'll double up the bag down here.
Where do I buy Naka when Polygon's at zero?
Ooh.
I mean, Polygon's going to be the next leader of the next bull market.
No way, man. Your pick of
I thought
L1s is so
ICP was
great.
going to be the leader
Oh.
of the next bull market.
They're going to lead together.
Oh, they're gonna be together. That's yeah.
The Matic ICP rotation. Phew.
And then we're all going to hit sell at the same time, and we're all going to be millionaires.
Very few.
Very few.
Tell me how beautiful that chart is.
Hey man, it looks like it's coming into the point of breakdown.
I still got room. What are you
A
talking
little
about?
bit.
It's not room.
It's either gonna top here or it's gonna go vertical.
Oh, it's gonna look. I already got it charted out.
Look at his magnet. It's a great magnet.
Oh, man.
You
All
learn
right,
from
let's
this, Will.
we got the Qs. Man, Qs hit Qs hit the number on the freaking head, man.
Where are the Q's at right now? Where's
Already drawn back.
That's CRC, brother.
All right. Oh, my bad. This is CRC. Whoops. It looks very similar. All right, Qs. Here we go. Same thing. So hit it right on the head. Top eye. Now we either have to break this range, or we're gonna break down from this range. So one of those two. But definitely interesting price range. There is some support, I'd say, right in here for the Qs. So you're kind of like in a trading range up here between these two highs and lows. But we'll see what happens here. It looks like it's stopping. So that's a doji high. Maybe get a little bit of pullback to a breakout, or this thing breaks down to lows here. I'd say like on a lower time frame, maybe like daily or so. Maybe they'll fit in this area right here, see where it wants to go. Yeah, kind of like right there. Like this is like your chop range right here. So like I would like to see it if it's gonna bounce. Honestly, I'll flip this. Reverse.
I have a question for you guys. Do you think that when we do top in equities, it will be like a U-turn type of reversal, or do you think that there's going to be maybe a 1 or 2 month period of distribution where we just kind of chop in a more traditional textbook type of distribution range before markdown?
I think we have to. I think we have to distribute. I think unless it's like a complete black swan, everybody leaves the market at once. I think we have to distribute because there's so much money that's come in to the market this year. Like I think they're gonna have to.
Very much in that same camp.
Yeah, they're
That's
gonna
right.
have to distribute it to people.
When I was
tell
listening
me.
when I was listening to Chem Carson on a podcast last week too, that was one of the things that he mentioned was you have to see volatility kind of carve out a bottom, and it's not usually like this isn't exactly what he said, but it was essentially like you don't really see the VIX just like U-turn and then indices nuke, you see volatility kind of find a level of support, kind of, where we were at almost 6 weeks ago before we took the next leg lower on volatility. You would see kind of something like that, obviously with a different end result. But, so the VIX does kind of give you, I mean, time is maybe the wrong word, or maybe it's the right word, where you have a few weeks or like multiple months to kind of get positioned for that type of reversal. Like it takes a long time to occur. And it should, like you said, Tucker. I mean, we had so much money come into the market this year.
What do you guys think of this? With the spot?
Like I'm going to be able to buy cheaper coins.
Yeah.
Yeah, I think that makes perfect sense. Well, actually, I wrote one of our premium articles on that. I think where I say this, I think you could maybe consider last year to be a bear market. Okay, we were down, S&P 500 was down 20%, give or take. But I think getting caught up in the definitions is a bit silly. I think, truthfully, we really will look back on this and just be within this mega range where, yeah, there was extreme volatility both to the downside and to the upside. We were not in a recession. And you could make the argument that we weren't even in a bear market. We were just experiencing a tremendous amount of volatility due to the Fed policies that were being implemented. So I think that we'll truly be in what I would consider to be a bear market once we breach the previous high like you have drawn, and we go on to make new lows, and we experience a 30% plus drawdown, and more textbook signs of a recession. Yeah, you're totally right. I mean, we see these like expansive ranges where both sides on the higher time frame get destroyed. People are capitulating as we're breaking down, thinking we're going to get new lows, when really it's just a sweep or a bear trap. And then, of course, I think what's probably going to happen is a lot of new money is going to pile in as we get closer to all-time highs, and they're going to be basically stuck, in drawdown for multiple years while the S&P 500 recovers. So I think, to answer Tommy's question, I think it's going to take a tremendous amount of time for this thing to roll over. I don't think it's going to be like a V top. Again, unless we see some sort of black swan, like if JP Morgan ended up being a Ponzi or something, then I forget what I said. But I think it's going to take some time.
Yeah, that volatility could come from multitudes of locations. Like I like these tops and these bottoms, though, like they're more rounded, right? You get time to play these. They're not just like boom, in and out. Like you get a decent amount of time on the lows, you get a decent amount of time on the highs to understand where you're at in the chart. But once you start taking drawdown, if you start getting into a denial stage, you're going to eat a lot of drawdown. Right, that's really kind of the issue here. Is like, and if you're more than willing to do that, hey, I won't fault you for it. That's your MO. I'm always looking to build my portfolio to try and gather more liquidity and grow my liquidity. And if I'm able to do that by capitalizing on a massive market pullback, and some of you may be like, well, that's a black swan. Or this isn't even a conversation of black swan. Occurrence 1, occurrence 2, occurrence 3. We're in a third. We're in a fourth phase right now of the same occurrence that has happened time and time and time and given the spot. Like if the pattern breaks, it breaks. But like until it breaks, I play it. That's just how it is. And if I'm wrong, I'm wrong. I'm on the wrong side sometimes. It does happen. And I'm more than willing to admit I'm wrong. I mean, we had a discussion this morning, Max, and I told you guys before we even opened the market time. I was like, I was just 1 week too early. 1 week too early.
Mm-hmm.
And I could have capitalized massively on that position.
That's trading.
That's how the market works.
That's just trading. That's how it goes.
I have a story like that, Will. I was extremely bared up for, when Bitcoin had broken down. This was back in, I'd actually gotten bearish like back at the tail end of October. Of 2021, because Bitcoin, we deviated all-time high on, no volume. And then we broke out of, kind of the range that we had pumped to the new all-time high from. And we were trading at about 57, 58K. And I sat in a The biggest perp short I'd ever taken to that point by far for about a week and a half. And it's just chopping down and chopping down. And I knew like 52K was not going to hold. It just didn't make any sense for 52K support to hold. And I knew people who bid it were going to get destroyed. So that was kind of like the basis of my short from, 57. And like I said, I sat in it for a week and a half. And then the morning of was December 4th. There wasn't even a big stop run. I just felt uncomfortable holding it anymore. I felt like I was wrong and I closed it out. And what did Bitcoin do? It shaved about 16K off of its valuation within the next 16 hours. So that one will stick with me for a long time. As far as like not seeing through conviction, or it's all about timing. It's all about timing. Even when you have the right idea, you can miss a move that you have, really high conviction in.
Yeah, and I think that's what a lot of people get caught up in. They get caught up in the conversation around like, when will it occur? Will it occur? I never look at it as will it occur. I always look at it as when will it occur, right? And I think that's always the best way to approach the market, because patterns are a thing, guys. Like if you get up every day and you brush your teeth at 8 a.m., what should I expect you to do if you're at my house and it's 8 a.m.? I should expect you to brush your teeth at 8 a.m. because it's a pattern that you do, right? Can you break it every once in a while? Sure. Money moves the same way. Money makes patterns, and it continues to make the same patterns over and over and over again. It's not about saying patterns can't be broken or patterns, can't change. But I can tell you this, the change is here in the charts. Where's the change at here? Well, I can tell you, it's very easy to see. Look, we've got one pullback, massive pullback, massive up. This drawdown, and this drawdown are much bigger than this drawdown and that drawdown and that drawdown, right? That's a pattern change. But guess what? It's still the same pattern. It's still a triple bottom low, right? So it did change. It just didn't change what it does, right? It just changed the drawdown percentage. And this is where a lot of people get confused, because they don't understand change does not equate to complete opposite of normality, right? There's always normality to markets that a lot of people miss. And that normality can be identified. I can tell you this, look, if you don't believe in patterns, more power to you. Right. But if you can identify patterns, you can make so much money in the markets. You can make so much money, because more often than not, they play. It's just a matter of, are you zoomed in? Are you zoomed out? And does it occur time and time again? And this isn't a biasy, like me coming in and trying to find, okay, well, this matches that, and that matches and that matches. Okay, so I'm going to tell people this one right here, this is the pattern. Because I can go on Tesla, I won't see these patterns. Won't see them at all, because Tesla's patterns are different, right? Just like patterns are different. It doesn't mean that every stock carries the same pattern. Every stock carries a different pattern. It's about being able to identify the pattern from one stock to another, one ETF to another. And we got to understand, when it comes to things like SPY, especially SPY, and we'll say when you're looking at things like Qs and you're looking at things like Russell, these are basically indexes that carry a lot of different things. And the reason that they tend to play out the same patterns is because as the SPY grows and the Russell grows and the Qs grow, they take on high risk positions on some stocks and low risk positions on other. They rotate some out, they bring in new ones. And as they're doing that, some of these stocks take massive hits, some of them see massive growth, right? It's just that the pattern plays out more in the factor of the way that the ETF itself is rotating, right? So it doesn't matter what specifically SPY picks up. It tends to be that SPY always has this scenario to where whatever it's picking up is the way it's picking the stocks that it's picking to go into the SPY, right? The way it's picking those, the way that ETF is picking those is always causing this triple bottom occurrence. I don't know if it's too much weight to high risk. very little weight to high risk, too much weight to no risk, very little weight to no risk, right? These are the ways that a lot of these ETFs evaluate stocks when they're putting them into their indexes, and they're trying to create an index that is well balanced. But whatever method that they're using is causing this pattern to occur again and again and again. And I guarantee they haven't changed their methods. I guarantee they haven't. Why? Because if you look at SPY, historically, it's a successful ETF. It just is, right? Or successful index, sorry. A successful index, right? Up, sideways, up, sideways, up, sideways, up. It's successful. So why change a method that's worked for hundreds of years? There's none. There's no reason to do so. So they're going to continue to have to see the same occurrence over and over and over again. Again, triple bottom. And look, I even identified one all the way back here in the 60s and 70s. 1, 2, 3. And again, this doesn't occur across all stocks, guys. Like this, I've only found this pattern typically on SPY.
Will, how much higher is that third top from the second in the 70s?
This one right here?
Yeah, the last top. How much higher is it from the second?
14%. Now, this one right here, this was a broadening, right? That's all this was. It was a broadening wedge that triple bottom into a vertical.
We've looked at that one before, I think. I guess the argument would be that we just put in the second bottom and are halfway up the to the third top, essentially.
Yeah, and we could do that up here. We could do that. Because, well, if you look here, you got one. This is where you initiated, right? Then you got your top, 2, and then maybe we get another top, right? A higher top. Then you get a 3, and then from there you might get a light pull back into a breakout.
What's 14% higher than 4,800 or whatever the exact top?
I bet it's like 5,000.
Well, yeah. 5,500.
5,500.
I know some people who would be very, very euphoric at 5,500.
Oh, dude, the market would be bidding in a freaking feeding frenzy. Guaranteed. Crazy times, man. Crazy times.
Will, how are you potentially planning to position as if we approach a new all-time high for the S&P 500? Are you looking to just go heavy cash or actually enter some shorts?
I'm to be honest with you, I need to identify a pattern before I identify a price, right? Like I like 55, but I want to see a topping pattern at 55. And if it goes to 5K, I want to see a topping pattern at 5K. If it double tops, I want to see a topping pattern at double top. So there's a lot of different ways that I have to approach it, but like I would definitely make some attempts on shorts, 100% definitely. But it wouldn't be like a 1 month, 2 week. It would be like a year long position where I would be looking for substantial losses in the markets to the downside, and I'd be looking to capitalize on that, flip that back over into long positions, and buy spot because I think it's always smart to buy a spot of those, and then run that back up if I can, right? If I could always get wrecked on those longs too. Just like I can get wrecked on the shorts, and I think that's what a lot of people miss is like, yeah, you can make money on one side and then lose it on the other if you're not smart about it. Which is why I typically like, if say I sized in on this short here and I caught it correctly, when I go back in for a long, I'm only probably putting 25% of that on long and then put the other 75% of that I gathered in cash back into spot. But yeah, I would definitely look to be shorting the market there. I would also be looking to unload a lot of spot position. And if I wanted to stay in the market, I would just look for the least drawdown assets, right? I think that's what a lot of people miss too. They think that you always have to move the cash. They think that everybody always moves the cash and that they're super bearish. So they're going to cash, so they hate you. Like, oh, you're cash, that's sinful. It's like, that's what you bought your assets. What are you talking about, sinful?
Yeah.
But with the cash conversation, it's like, if say you don't foresee what I'm saying, right? Then okay, say we want to lessen risk because we've been in so much heavy risk and we're up here. Is it smart to be in heavy risk? I would argue no, but some people would argue yes, because ridiculous number that they just made up in their head. I would say, like, if you're getting to a point to where you're not feeling comfortable in the market, you can do two things. You can move to cash, or you can move to less volatile, right? What's less volatile? Well, in an environment that's going to get crushed, guess what? Bonds are probably the play. Safer assets are probably the play, right? Because the higher this thing goes, the more bonds get crushed, the higher the return is going to be on bonds, and the VIX is going to be destroyed too. There will be a reckoning to the VIX, 100% there will. And the VIX still has much lower to go. I think 8, 9s, 10s is a possibility, triple bottom low. But when that thing starts coming back, these markets are going to get destroyed.
Yeah. Well, guys, we've been going for a little bit over an hour now. What do you say we wrap things up?
Yeah,
Let's do it.
We get our man Tommy back in here.
I think it's back.
Just for the outro. All right. Well, thank you guys so much for tuning in. We hope you have a fantastic rest of your Wednesday. And don't forget to hit the like and subscribe button if you haven't already. We will be back tomorrow for another episode of Market Check. And if you enjoyed the content today, a reminder that we have all of our premium content, as well as more intimate access to the way we trade and just kind of our thoughts on the market, linked in the description of this YouTube, as well as the link tree to our Twitter. But yeah, guys, we really appreciate it. Once again, thanks for being here, and we'll be back tomorrow. Have a great rest of your day. Thanks.
Thanks, guys.
Thanks, guys.
Thanks, guys.